What's going on, guys? Alan here from Goals of Wall Street. Okay, so in this video I'll be talking about a case study I'm doing a case study, like I'm trying to experiment what would happen with regards to how quick the losses are recovered when we increase the number of pairs being traded, when we increase the number of instruments being traded, like what we did on the currency robots. If you remember the currency robots, we were trading 15 different currency pairs. So in case of a loss, the recovery rate or the recovery time was reduced, or it was faster to recover a loss when you are having 5 trades in a day, 6 trades in a day, and all that, because we used to trade up to 15 different forex pairs, but those pairs we are not trading every day. Okay, so I want to do the same with the synthetic indices. So I will be showing you all the robots I'm running on my account. Most of you, I think you've seen that account I post on Instagram. I think I'll post it here on YouTube. Okay, so I'm running 6 robots, a total of 6 robots on that account. I think 5 or 6 robots. So I'll show you these robots, starting with the Crash500 index battle robot. It trades the Crash index and it trades the 1-hour chart. Let me start the back test. Let's start the back test. So I want you guys to see all the 6 robots, and the lot size. We'll be using a lot size of 0.5. So we'll be testing out different lot sizes here and there. I want you guys to see the risk involved in these markets, and how we can increase the rates at which losses are recovered. So this is a balance line for the Crash500 robots. The balance line just shows time on the x-axis and profits on the y-axis. So as you can see, largest profitable trade is 0.9. We're using the smallest lot size, one of the smallest lot sizes. So this is a robot which trades a lot of trades in a day. So from 2019, it's traded 2,592 trades. This robot will give you up to 5 trades, 6 trades on a good day. On a good day, this robot will give you up to 6 trades, 5 trades, 3 trades on average, 3 to 4 trades on average. So the largest profitable trade is 0.9 for this robot. It trades the Crash. As you can see, the loss is quite deep, and that's why we're looking for ways in which we can recover these losses faster. We want to recover these losses faster. Okay, so that's the balance line for this trading robot. I'm gonna show you all 6 robots. I think there are 5 or 4, but they trade different pairs, some of them. Okay, let's see what's the smallest volume. It's 0.2. So the smallest volume is 0.2. So let's try to use the smallest volume, because some of you guys are coming with small accounts. So let me use 0.3. Let's try 0.3. Let's run the back test. Okay, so the back test is done. Making 0.5 per trade, we are risking 90. So with 0.57 per trade, profits of 0.57 per trade, we are risking 90. So let's see, in 30 days, this guy gives on average 50 trades, 50 to 60 trades in a month. So we multiply 50 by that, so we're having 27. We're having 27.5. Okay, let's try the smallest lot size. Maybe someone will come with a very small account. Okay, so risking 60 will be making 0.37. So 0.37 7 times 30 or times 50, because this guy gives a lot of trades, times 50. So $18 in a month, $18 in a month on this robot. But then you won't be trading this robot alone. So we'll test other robots as well, so that you can see the risk and all that. So now let's go to Volatility 75 index. Let's go to VOT 75 index. This guy trades the M30, and we'll be using it on the smallest lot size. We want to see the risks and how much one can make when you are trading all the robots, and how much you are risking. Okay, so let's start the back test. This is VOT 75 index, battle robots. It trades the 30 minutes chart. Okay, I forgot to change there. I forgot to change to Volatility 75. Sorry, Volatility 75. Okay, let's run the back test. Losses. We shouldn't be fearing losses. If the recovery rate for the losses are faster, we shouldn't have fear for the losses. Once we have the required account balance, whereby we can survive a loss and recover, we shouldn't have fear. So that's the balance line for VOT 75. So for VOT 75, you're making 1.9 on the smallest lot size. You are making $1.9 on the smallest lot size, and you are risking on average $87. Maximum you are risking $100. Okay, so let's calculate, guys. 1.85. Okay, so $55 in a month. If you are trading VOT 75. So we're going to add all these, the $18, the 55, and others. We're going to add them so that we can see how much we can be making if we're trading all these robots at the same time. But on a small account, you can't trade all these on a small account. As you can see, others were risking $100, others were risking $80. So you cannot trade all of them, but you could trade some. If you can have a bigger balance, you can trade all of them. So now let's go to Step Index Battle Robots. This guy trades the 30 minutes chart. Let's review this one. So the first bot gave us $18, the other one gave us 55. So now let's see step index on the smallest lot size. So the smallest lot size is 0.1. This guy is the most risky robot of them. Oh, it's got a high risk. This guy has got a high risk. Let's run the back test. So as you can see, we don't know when next the loss will hit. That's why it's important to have a recommended balance, so that when the loss hits, you have chance to recover. If you're using a small account, there will be no chance to recover. Okay, so as you can see, with this guy, we are making 0.5. and we're making 100. This guy has got a high risk. It's higher than VOT 75. This robot has got a high risk. So that's the balance line. So let's multiply 0.55 by 30. 0.55 by 30. We'll add all these figures, guys. at the end of the video. So this guy will give you $15 if you're using the smallest lot size. This guy will give you $15, and you'll be risking $100. So you cannot use this robot on a small account, because you are risking high. It can trade the small account, but these drawdowns might give you margin call before they hit stop loss. So 0.5, and you are risking $100. Okay, So these markets are dangerous. We don't know when next the loss will strike. It might even be today, it might even be tomorrow, but we have to have a bigger account to allow us to recover. So let's go to the next one. Crash500, Crash300 1PD. So this robot trades the Crash500 and the Crash300. 1PD simply means one trade per day. One trade per day. Remember that Crash500 robot which gives a lot of trades in a day. This is a version now which gives one trade per day. It's the same robot. It's the same robot, but I've just coded it to give us the first and best trade of the day. The first trade of the day is the best. So this robot gives us just that, the first trade of the day. So for those who do not want to be having a lot of trades in a day, they don't want to risk more, they don't want to risk the risk which comes with using a machine gun. There is a risk which comes with using a machine gun, more losses, but then more trades again. It's a trade-off, guys. It's a trade-off. So now as you can see, we only have 2 losses. On the machine gun version we had 5 losses from 2019 till date. We had 5 losses, but for this guy we only have 2 losses from 2019 till date. So here you are making 1.4, risking 200. Let's see if we can reduce the lot size. What's the smallest lot size again on Crash500? Let's see, because we want to accommodate guys with small accounts, so 0.2. So let's try to reduce the lot size even further. We're trying to accommodate everyone. Okay, so you are risking $80. You're making 0.58. You are risking $80. So 0.58 by 30. Oh, sorry. 0.57 by 30 days. 0.58 by 30 days. 17.4. This guy would give 17.4 in a month. So, but then if you have a bigger account, you can trade all these. You can risk. There is a risk again which comes with trading all of them. There is a risk again. So when you're using 0.2, you get 17.4 on this guy. So now we'll change to Crash300. This robot trades Crash500 and Crash300. On Crash300, this guy trades the 30 minutes charts. It trades the 30 minutes chart on Crash300. So now we'll just increase from 3,000 to 7,000. So meaning on Crash300, it's better to trade this guy on Crash300 because we are maintaining the same stop loss. And the bigger stop loss in algorithm trading, I explained to some of you that that's the price for consistency, because we want to survive the drawdowns. Because there are different types of drawdowns, small, big, and what we want to survive, so that only a few can hit stop loss. Okay, so that's the balance line on Crash300. So let's see. So this guy is giving at least 1.3 and we're only risking 8. So this one is better. This one is good. It's good. Let's see if we can reduce the lot size. For guys who have got small accounts, we want to accommodate everyone. With small accounts, big accounts, we want to accommodate everyone. 0.05 is the smallest lot size. Let's see. Let's do a back test for guys who might have a smaller account, a relatively small account. You know, small, the term small, the word small is relative. So what might be small to someone might be big to another person. So I'm using the term relatively small account. Okay, so This one 0.6 per trade for 30 days. You are only risking $40 in case things go sour. In case we hit stop loss, it's $40 you are risking. That's what it means, guys. You are risking $40 on this guy. So now let's multiply 0.65. We multiply it by the number of days in a month. Sorry about the background noise, guys. Sorry about the background noise. This one will give you $21. This guy will give you $21. So now you won't just be trading one. You won't just be trading one robot. No, you'll be trading different robots. If you have got a bigger account, you'll be trading different robots. So this guy will give you 21. Okay, so now let's go to the last one. This one is a Crash500 battle robots. So this one has got indicators, as you can see. It's a complex algorithm, this one. Okay, so this one we've increased the take profits to 10,000, but the stop loss remains the same. The stop loss remains the same. It trades Crash500. Let's use 0.1. Let's run the back test. Let's run the back tests. I forgot to change. This one trades 5 minutes charts. It trades the 5 minutes charts. These robots are sensitive to time frames, guys. You don't just use any robot on any time frame. They are sensitive to time frames. Okay, so these robots, as you can see, they are different. They trade different. They are different. The losses are random. You don't know when the next loss will strike. That's why you have to use the lot size. Okay, so this guy, we are risking 40. As you can see, this robot is better for small accounts, this one and the others. So Crash500 is good for small accounts. 0.9, you're only risking $40. It's good for a small account. It's good for a small account. So let's multiply 0.95, okay, 57 by 30 days. So this guy gives you 29.1, and you're only risking $40. So this is a robot for you guys who might have a relatively small account, but then it's always recommended to have a big account because we don't know when a loss will strike. Imagine you are trading with a $30 account and the loss of $40 strike, meaning there will be no time to recover. There will be no chance. There will be no chance to recover. So now let's add all those balances. There was 18, and then there was one which gave 55 in a month. The other one gave 15, 17.4, and then we had one which gave 21. Then the other one gave 21, and then the other one gave 29. So plus 29. $155. If you're using a small account, if you're using small lot sizes, or if you're using a relatively comfortable account, a big account, and you're risking to trade all of them, that would be your monthly targets for a relatively comfortable account, and you're using small lot sizes, you're using the smallest of lot sizes. That would be your monthly target. So the reason why we are doing this, like having different pairs, having different instruments, is so that we can recover losses fast, guys. As you may know, a loss can strike anytime. I cannot lie, these robots are not bulletproof, guys. I don't know when the next loss will strike. It can be any time, it can be today, it can be tomorrow. That's why you have to come with an account which will give you time or chance to survive a loss and recover. And that's why we're using many robots, so that we can be having up to 6, 7, 8, 10 trades in a day, and that way we can recover fast. That's a case study I'm doing. Follow me on Instagram for more results, guys. Thanks for watching. Subscribe and cheers guys, cheers.